In August 2018, Elon Musk posted a short message online that instantly shook Wall Street and triggered one of the most talked about moments in modern business history. The message was simple: "Am considering taking Tesla private at $420, funding secured." Within minutes, Tesla's stock price surged as investors rushed to understand what was happening. Financial news networks interrupted regular coverage. Traders across New York scrambled to react. Billions of dollars began moving through the market almost immediately. At the time, Tesla was already one of the most controversial companies in the world. Supporters believed the company was changing the future of transportation. Critics believed Tesla was under enormous pressure and dangerously overvalued. The company was facing production challenges while trying to massively increase manufacturing of the Model 3 sedan. At the same time, Tesla had become one of the most heavily shorted stocks in America. Short sellers are investors who bet that a company's stock price will fall. If the stock rises instead, those losses can become very large. Over time, tension between Tesla supporters and short sellers grew increasingly intense online. Then came the tweet. The phrase "funding secured" immediately grabbed attention because it suggested financing for the deal already existed. Investors rushed to buy Tesla shares before a possible buyout could happen, causing the stock price to jump rapidly. Meanwhile, investors betting against Tesla suddenly faced major losses, but confusion spread just as quickly. Many financial institutions appeared unaware of any finalized agreement. Reports suggested some people connected to Tesla had not expected the announcement. Financial journalists and analysts quickly began asking the same question: was the funding actually secured? Attention soon turned toward conversations between Elon Musk and Saudi Arabia's Public Investment Fund, which had reportedly shown interest in Tesla. However, public information suggested those discussions were still preliminary rather than officially finalized. As uncertainty grew, regulators began reviewing the situation. The controversy exploded across social media. Supporters defended Musk, arguing Tesla had long been targeted by critics and short sellers. Others argued that major public figures carry serious responsibility when making statements that can influence financial markets. The story quickly became bigger than Tesla itself. It became a global conversation about social media, market influence, and the speed at which online communication could now impact billion-dollar financial systems. For decades, major corporate announcements typically came through press releases, interviews, or investor meetings. But this moment felt different. A single online post had moved global markets within minutes. Tesla's stock price became highly volatile as investors waited for more clarity. Then, only weeks later, Musk announced that Tesla would remain a public company after discussions with shareholders and investors. The market reacted once again. Soon afterward, the U.S. Securities and Exchange Commission, the SEC, announced legal action related to the tweet, arguing that the statements created confusion among investors. Eventually, a settlement was reached. Elon Musk and Tesla agreed to financial penalties, and additional oversight procedures were introduced regarding company communications, but the larger impact of the event remained. The situation demonstrated how social media had changed modern finance. One online post from a major public figure could now influence markets faster than traditional financial systems could fully respond. And it showed that in the modern internet era, financial markets were no longer driven only by boardrooms,